This program was made possible by the Corporation for Public Broadcasting and by contributions to your PBS station from viewers like you. Thank you.
Coming up on Market to Market. Wet weather delays the harvest of near-record grain and oilseed crops. USDA predicts net farm income will fall by nearly 40% from 2008. Nevertheless, a cutting-edge renewable fuels producer is bullish on the future. We'll examine the economic outlook for rural America on a special edition of Market to Market next.
Partial funding for the mobile production of this program from Southwest Iowa was provided by a grant from the Iowa West Foundation. More information on the Iowa West Foundation can be found at www.iowawestfoundation.org.
Funding for Market to Market is provided by Pioneer Hybrid, working with growers to help put the right product in each field. Pioneer, science with service, delivering success. From Shenandoah, Iowa, this is a special edition of Market to Market, the Rural Economic Summit.
Welcome to Shenandoah High School. I'm Mark Pearson. We're going to depart from our usual format on Market to Market this week to examine the impact of the recession in rural America. Now, this is the first of 4 special road editions we'll produce in 4 Midwestern states over the next year. And at each Rural Economic Summit, we'll hear from experts in different sectors of the rural economy. Tonight is no exception, and we've assembled a distinguished panel to answer any questions that you might have. And let's go around the horn and introduce this panel to you. First of all, Greg Connell with the Shenandoah Chamber and Industry, who is here with us, who has spearheaded a great effort here on the biofuels front. We'll talk more about in just a moment. Also, of course, we have Kim Greenland. He is the market president for Great Western Bank over at Mount Ayr, Iowa. And we have Mr. Tim Eggers joining us, and Tim is economist with Iowa State University, extension economist, and he is over representing a big chunk of the southwest part of the state of Iowa. And of course, Sue Martin is joining us, and she's been a fixture on Market to Market for more than 3 decades, and she was one of the first women in her field, and she regularly speaks to national audiences on price trends and marketing strategies. So it's great to have this great panel with us, and it's a great chance to find out more about what their thinking is. And also, of course, we are going to be visiting with the folks here in our studio audience as well here at Shenandoah High School. So if the economic vitality of rural communities can be judged by the activity that we've seen here in Shenandoah, I think we can all be very pleased. It's good to have this panel with us, and let's go right to some of our questions. We've had several people who have put questions on index cards, which I like, here in Shenandoah. And there's a couple of those that I wanted to get to right away. And one, let's start with this, and that is with all the economic growth and that we've been talking about, biofuels and so forth. Greg Connell, you really capitalized on that with this current project. We've talked about it before down here, but give us your take about what's ahead, what's next for a rural economic community like Shenandoah that truly is a rural area here in the state. Where do we go from here? We've had some agricultural prosperity the last 3 years, obviously value added with ethanol. What else do you see?
Well, as I said earlier, we need to kind of look outside the box. I think it's important that we draw on our strengths, and that's obviously agriculture. I think we also have to realize that in these tough economic times, there's great opportunities, and I'll give you an example. Our city council and mayor supported and passed a huge urban renewal project for our downtown area. It's a package of about $1.2 million, and they sold those bonds for an average coupon of 3.2%. When I was mayor, I was elected mayor in the year 2000. As I looked at our bond schedule, most of our bonds from the 80s, we had an average coupon of 9 or 10%. Right. So the interest environment has allowed cities that are willing to dream, that are willing to take a chance, and again, a calculated chance to do great things at much less money than what it cost 10, 20 years ago.
All right, well, we've got a great panel here ready to take some questions, and we have a person at the microphone here in our Mustang Shenandoah High School auditorium. Yes.
Hi, my name is Shelley Smith, and I would like to see our ethanol industry continue and be boosted. what do you think are the prospects of the EPA approving E15, which could help our ethanol industry?
Greg, I'm going to let you take that first because you've been so involved in the ethanol industry. What's your take on that?
Well, you know, it's obviously a battle that we think is a no-brainer. I mean, we think that that's you know, something that should have been acted a long time ago. I think that the EPA has slowly kind of drug their feet, but I think that they are going to approve the 15%. You know, if we're going to continue to grow this industry, we're going to have to also grow the share of ethanol in the gasoline market. And the only way we're going to grow that is to increase the blends. So I think that it's going to work. I think that, you know, we have $80 oil again today. You know, the dollar continues to drop. We'll be looking probably at 100 to better than $100 oil. You know, what that's going to do to gasoline, you know, nobody knows. But the reality of it is that by substituting renewable fuels, we're all winners.
That's right. And Sue Martin, talk a little about the economics this year. Crude oil has been rising this week. Somebody didn't get a chance to talk about in our market segment. But we've seen strength in crude oil. You know, there's a lot of concern with the weaker dollar and a global economy that is starting to strengthen, increasing demand for fossil fuels. And that actually plays into ethanol and helps make those ethanol plants profitable.
Well, it does. Actually, you know, OPEC, who seemed, you know, was tickled pink when crude went to 147 a blue barrel, is basically concerned with crude getting too high, and yet they're not turning on the spigots very more, you know, to raise their production. But we've gone to the 82 cent area, or dollar area, and it's very possible we get up around 85. Do we make it to the $100 mark? I'm not so sure about that, because there is the concern that the economies around the world are starting to awaken. And, you know, China's growth is around 8.7% or 8.9%. Some had thought it would be 9.1, but still, you think a country that size with 8.7% growth is pretty huge. And they're starting to create more demand for various products, and that's going to start to get these ships that have been, these tankers that have been loaded sitting at sea, filled with crude oil. They're going to start to unload those first, and then you'll start using those vessels to ship products again. That'll create more demand for crude. It's kind of a round robin. In the meantime, as crude goes up, corn looks at that, and the price of corn kind of vies with it a little bit as well. But I also think that when you look at the economy's growing, demand for gasoline has grown. That creates ethanol. You look at those spreads apart, and RBOB and gasoline or ethanol have narrowed quite a bit.
Very good. All right, Sue, it's well said. All right, now one of the ways that the state of Iowa is trying to strengthen and diversify the economy is by fostering the development of renewable energy. A key tool to do that, the Iowa Power Fund, was a centerpiece of Governor Chet Culver's campaign. The fund calls for $25 million in annual spending to spur development of renewable energy. Culver claims the roughly $30 million already spent on the Power Fund has leveraged $190 million in federal funding along with private investment. Tangible benefits of the Iowa Power Fund are readily apparent here in Shenandoah, where the program has provided more than $2 million to help develop the next generation of alternative fuels. Green Plains Renewable Energy's venture into algae production was based on more than a strong balance sheet. A potential next-generation energy source received a multi-million-dollar shot in the arm from the Iowa Power Fund. According to company CEO Todd Becker, the more than $2 million taxpayer-funded award helped spur project development.
So overall, I think the Iowa Power Fund was hugely instrumental in making this happen. Without it, would we have moved forward? I think we would have had to think twice a little bit about it. But because of the public demand and the public need for something like this, we felt very confident. Maybe we would have moved forward slower, you know, so maybe these wouldn't be here today. The Iowa Power Fund is the fruition of Governor Chet Culver's campaign promise to promote renewable energy projects across the state.
Because we are really focusing on securing our energy future, not just for Shenandoah or Iowa, but to help other countries.
A $25 million annual appropriation from the state legislature is overseen by an 18-member board. 2 years into the grant process, the Power Fund board has already chosen a series of recipients, including nearly $15 million to biofuel producer Poet and their Emmetsburg cellulosic ethanol plant's Project Liberty. nearly $3 million for wind turbine construction at Newton, Iowa's TPI, and $1.7 million for advanced solar panel development at Iowa State University. Outside of the recipients themselves, the Iowa Power Fund's largest supporter is the man who signed the program into state law.
And we are doing about 30 of these projects now across the state thanks to the Iowa Power Fund. We are changing the way that we use energy, we consume it, we're making it more efficient in terms of this plant, for example, not only reducing emissions, but using the byproducts of this algae technology to help with feedstock and in other important areas. So it's a great day for Iowa. Thank you all very much.
Despite the governor's enthusiasm, critics argue programs like the Iowa Power Fund waste taxpayer dollars, bypass the free market system, and artificially pick winners and losers in the energy sector. Further complicating the program's future is a widespread economic recession that has hit state governments with heavy budget shortfalls. In Iowa alone, state officials must trim hundreds of millions of dollars from the current year's budget. Early projections for the following year's deficit have crested as high as $1 billion. Legislators may be forced to defund many programs, leaving initiatives like the Iowa Power Fund vulnerable. The program's future remains less than certain. Rural economic development is what keeps rural America going. And of course, we've had some great opportunities to do that with the expansion of the biofuels, the energy bill of 2006 passed by Congress. One of our questions already that's come to our committee up here, our panel, has been the whole issue of E15. And we'll have to see what the EPA decides on that. But that could also bolster demand. Right now, we're using about 4.5 billion bushels of corn out of the 13 billion that we produce, are expected to produce in 2009, is going into ethanol production. Kim, give us your take on the biofuel profitability and outlook as from a lender standpoint. As you're looking at this, there have been huge challenges to this industry in the last 12 months.
Obviously, lenders have been cautiously optimistic, played a large role in getting some of these plants off the ground, lending throughout the Midwest and the states. Some challenges, obviously, in that ethanol industry has done a lot toward boosting the income of our farmers, bolstering them prices. So, the economic spinoff and the involvement and the risk that we've looked at it, the risk and reward ratio has been good. Obviously some challenges today in that industry, but we're optimistic on it, optimistic that it's the future of our industry. Lenders, Iowa lenders, Midwest lenders, Iowa bankers have played a good role in that and want to continue to play a role in funding those projects.
When we talked about in 2008, we had the huge run-ups Greg alluded to and Sue alluded to in oil prices. We saw those extremely high corn prices, and yet we had some margin challenges there because at the same time, in the agricultural community, we're carbon dependent. We use a lot of fossil fuels. Tim, in your work in Extension, I know you talked to a lot of producers about looking at costs and making decisions. We've got a little bit better scenario going into 2009. How do you perceive the input situation for agriculture going into the spring of 2010?
Well, things became quite a bit more volatile, not only on those commodity prices you said, but also on those input prices. And so the challenges then really magnified for producers. When we had very stable prices, then we could forecast pretty well. But then whenever we have oil prices that are going up and our nitrogen prices are going up, then we start to pull other things out of whack. And so it's been I hate to say challenging again, but a real challenging situation in that regard because the relationships, as Sue mentioned earlier, tying the corn price to the oil price. And Chad Hart, as he was preparing for his Outlook seminars last week, was discussing how that relationship has been very tight for the past couple of years, and it just seemed to separate a little bit about 2 weeks ago. But those relationships have become new relationships, and so the rules of thumb that were easy rules of thumb for farmers to use as they were going through those decision-making processes have become less easy.
I was talking with your colleague John Lawrence up at Iowa State, extension economist on the livestock front of the beef center. We're talking about, and Sue mentioned earlier, the challenges the cattle industry has faced. And as we have seen, obviously more corn going into biofuels and also more demand for corn as corn's traded as an energy. But that also really put a big hit on livestock producers. Kind of give us the temperature of livestock production here in Southwest Iowa.
Well, I don't work as much with the livestock producers, so I can't answer that question as well as I would like. Darrell Busby would be the person I would refer you to. He doesn't happen to be here right now.
Yes.
And so, one of the challenges there has been who wins and who loses. That sort of, are we in this together, or are we here as individuals? And I think that's been a very challenging thing out in the rural parts, as we have the livestock producers that may or may not have been profiting nearly as much from that run-up in prices, but yet want to see that profitability happening on the corn side especially.
All right, let's go to our audience. A young man here with a question. Tell us who you are, where you're from, and your question.
I'm Sean Smith from Thurman, Iowa, and I've talked to a local ethanol plant tonight, and for 2010 I can receive $4 for corn for October delivery. Should I be taking that?
Sue Martin, that sounds like a custom-made question for you. We're going to go a little religious on you. All right, go ahead, Sue. You've genuflected.
$4 for October 2010? I would say yes. I would probably book some of that because of the fact that if that's the cheapest price you sell next year, you're going to have a good year. And your input costs are looking like they're going to be fairly reasonable for this coming crop. So I would say, yeah, I would go ahead and book some of that. Granted, it's a nice start.
That's $4 cash right here in Page County.
I had one other question, too.
Fire away.
I'm also a cow-calf producer. Should I be increasing my herd now or decreasing?
Sue Martin, I'm going to throw that to you, too.
I almost took it anyway.
I know.
I would recommend that you increase. I think that we've been seeing some tough times for the cattle producer and the hog producer, but if our economy, if the Obama administration is on target and our economies are growing, and of course, as our economy grows, world economies are going to start to take off in various places too. And while they want to badmouth us all they want, and our dollar is so cheap, it's at 14-month lows. It's not through the lows it was a year ago in March, but our product is good. And the one nice thing about the ethanol, it has brought back, because of the DDG, it's brought back cattle to Iowa, and that's been nice to see. But the cow-calf, I would expand because I think you're going to have good demand for beef this next year as these economies grow. Part of our problem has been the fact that the economy had slowed and you had a lot of people out of work. We always have to remember unemployment lags the turn in the economy. And so therefore, at some point here, yes, the economy will turn, you'll still have some unemployment, but then as the economy has turned, people are starting to demand more products. All of a sudden, producers or industries start to think, oh, I've got this demand, I need more people working, and they'll start putting more people back to work. The demand will start to grow. And of course, a cow-calf man, the person who takes that calf and puts it to market weight size, that takes time. And so that time, I think, is on your side.
Thank you. Great questions. All right, livestock producer there. And, as we look at the economics of the livestock business, Kim, it's been pretty challenging for that livestock producer, for that cow-calf operator out there. We have seen calf prices haven't performed as we normally see them. When corn prices came down, we expect the feeders to come back up. Give us your outlook as a banker for Mr. Smith expanding. What are you going to tell him when he sits across from me at your desk there and needs to borrow some money to do just that?
Well, I think a similar response. We in Southern Iowa like the prospect of the diversification that brings. It separates that risk out a little bit. A lot of our cow-calf producers obviously in other entities, row cropping and things, and we feel that it brings some diversification. We've had some fairly good returns with a lot of our investors here in Southern Iowa in prior years. Last couple of years we've had some challenges, but over the long haul, we think it's been a good investment for our good partnership with our farmer borrowers. Good diversification, a good utilization of some of our ground here in Southwest Iowa, Southern Iowa. A lot of this ground's not fittable for row crops, so good use for it. We have seen a lot of it plowed up when the prices went up. But again, a lot of our cow-calf guys are in it for the long haul. We're in it for the long haul as partners with them, and we foresee it as being a good entity and good part of the cattle production business.
All right, and of course that diversification is so key, and so we talk about all these commodities, and yet so many farm operations are either one or the other. They're either corn, soybeans, and the livestock left a long time ago, or they're in the cattle feeding business in particular in this state, or pork production. And your take on cattle prices, you're optimistic there. Pork, is it going to improve? Iowa is the hog state, and yet we've had these huge pressure from the higher feed costs, as Tim alluded to, but obviously we've had a struggle with prices. Exports are down. What do you tell pork producers?
Well, I think that I would have liked to have seen more liquidation than what we've seen. That concerns me. But again, if we can get these economies rolling around the world, and I think we've come through so far. We've come through the H1N1 rhetoric that we've seen quite well with the world buyer, and so I think that's a plus. So I think that with a better feeling of economies going, I think that's going to be positive, and you start storing pork, on November 1st, and so I think that's a good thing for the hog market as well, especially next summer's hog prices. Normally, starting about tomorrow, July hogs of 2010, normally you buy them on that date in 14 out of 15 years. Of course, there's no guarantees, but they tend to make money. So I think that the hog market is going to get better too.
All right, so as you look at that side of it, from the livestock side of it, maybe we have turned the corner. Maybe on the meat production side and the protein production side. I was in Florida yesterday, and I talked to a lot of people in the broiler business, and they have been stung hard by these higher feed input costs, and they mistakenly blame ethanol as opposed to blaming high energy prices for that issue. But as you look at that industry and the overall protein sector, you think maybe better times in 2010?
I think we're going to have some better times in 2010. I think that the one thing we have to realize is you're going to see an increase in corn acres this next year. Probably we'll take our corn acres up 2.5 to 3 million acres. That means less bean acres, except that we're not going to probably get all of our soft red wheat in. That'll pick some bean acres up too, possibly. But the bean market, the oil seeds, you'll have some good times there to some degree, but we're going to have to watch it because at some point our demand that is so front-end loaded, you could have, if we can't get these ships loaded, get this crop harvested and get those ships loaded, we're going to lose some of that demand, and those cargoes are going to get washed out and sent to South America. And and we talked about the 15% mandate on ethanol. Brazil has a 25% mandate. They're very aggressive. But and they're planning on planting more corn because there's talk of sugar being raised that instead went into ethanol is going to go into the world market. So we've got to watch it. China's building. There's lots of changes taking place. China's building reserves, and they're talking about increasing those reserves. At some point, if they come off with a good production year, we're going to have them very self-sufficient. They won't be importing as aggressive as they have.
Will slow down.
Yeah.
And that's the beautiful thing about what's happened here in Shenandoah, and that has been the fact that we're adding value here. And I want to talk more about that, but I also want to remind our viewers that you can get more of Sue's comments and Sue's outlook at the market at our internet website, markettomarket.org, where you can click on Market Plus, and Sue's going to give you her take on what's happening in all the markets and in some detail. So be sure to tune in for that on the World Wide Web, markettomarket.org. One of the things that have excited me about what we've seen in biofuels and ethanol and the project that's occurred here in Shenandoah is the fact that Main Street, small town, and rural farm producers out there have really come together. And Mr. Smith's comment about the cattle industry, gosh, there's another one. It doesn't seem like we can ever export our way to prosperity in agriculture. If we can add value here at home, add jobs, we add opportunities. Well, Greg, I'm curious, what else do you see down the road besides biofuels? What else do you see? What other linkages between rural small town, Main Street, and out there in on Route 1?
Well, I think what you said is exactly right. We need to retain all the value added that we can. For generations, my parents, grandparents, great-grandparents, we gave the value away. I mean, we would grow the crop and live on subsistence prices and see other people become wealthy. And I think we have awakened to the reality that we can do a lot more value added here, and as a result, keep that money in our local communities. Keep that money on Main Street. Keep that money in the farmer's pocket. You know, what would the price of corn be without ethanol right now? We know it wouldn't be at $4, obviously. So, you know, that's the synergy that we have to have, that, you know, as economic developers, the more things that we can bring to a community that add value, that allow the farmers another market, then again, that's just more money in the community. It makes a better Main Street and just makes a much more harmonious community.
Yeah, absolutely. Kim, you're involved in a lot of economic development work. What else do you see going forward for agriculture and Main Street coming together?
A lot of synergies and working together with communities throughout southern Iowa, throughout Iowa. You know, there's just a lot. It's exciting what's coming down the pipeline. You know, the technology that's coming at us it's wide open. The future for farmers, for value added. We just need to work together as communities, economic development throughout the state of Iowa to make sure that those industries stay here, that we're putting the money in the right places, that Iowa bankers are doing what we do best, keeping that money locally, and these folks that you know, are bringing commodities and equities and things to farmers. It's an exciting time for agriculture. I'm proud to be a part of it.
All right, I want to say a big thanks to you, Kim, for being here. A big thanks, Tim, to you for being here, representing Extension from Iowa State. Sue Martin, it's always a pleasure to have you with us. Greg Connell, thank you, and thank you so much for this tremendous project that helped bring us down here to Shenandoah. What a great community you have, and you have every right to be very proud of it. We wish you all the success and prosperity in the future.
We thank you for coming to Shenandoah, and as you
All
can
right,
see, Shenandoah welcomes you.
Thank you, sir, very much. That'll wrap up this special Rural Economic Summit here on Market to Market. Again, a big thanks to all of our panelists for being with us. A beautiful community of Shenandoah, Iowa. We also want to remind you that we'll produce 3 more of these special road editions of Market to Market over the next year. Future programs are tentatively slated in Wisconsin, Nebraska, and Kansas, and you're invited to join the discussion by submitting your questions at the Market to Market website. Sue Martin will be blogging at our site over the next week, and you're invited to share your insights as well. Be sure to join us again next week. We'll return to our regular format. So until then, from all of us at Market to Market, thanks so much for watching. I'm Mark Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Partial funding for the mobile production of this program from Southwest Iowa was provided by a grant from the Iowa West Foundation. More information on the Iowa West Foundation can be found at www.iowawestfoundation.org.
Funding for Market to Market is provided by Pioneer Hybrid, working to provide growers with local knowledge and support to help get the right product into each field. Pioneer, science with service, delivering success.
This program was made possible by the Corporation for Public Broadcasting and by contributions to your PBS station from viewers like you. Thank you.